Hey guys, what's going on? In this video, I'm going to be talking about small account strategies. I know so many people out there are trying to grow their small portfolios, and today I'm going to talk about a few strategies that are the most lucrative and the highest potential to turn a few $100 into a few $1,000s. Here's a student in my private Discord that took the play. I'm going to show you shortly. It made 200% on his money. Another student messaged me in a play he opened with $11,000 reward for less than $4,000 worth of risk. So basically, I'm going to be talking about how to 2x to 3x your money with a small portfolio fast. If you can do this even a few times a year with your risky portion of your portfolio, then it will drive your returns much higher. But obviously, we will also talk about managing these small option trading strategies so you don't lose your money and understand how to enter and exit these trades. Closing these trades is very important and can be the difference between being profitable as an option trader or losing some of your capital. Because smaller strategies do tend to have greater risk, you need to understand how to get in for the cheapest price possible, manage the position, and then close it with a profit on your hands. You're really going to like what I have for you, so make sure that you take notes. Each of these strategies will aggressively grow your portfolio more than the basic strategies, but these strategies also require more time and work to manage the position. That's because more volatile strategies, especially buying strategies, I do like to close earlier than expiration, as you will see. Make sure you also get your free copy of my ultimate option trading basic guide by signing up to the free email list below. I do also have a paid Discord with 6 and 7 figure option coaches, a course, buy and sell signals, portfolio access, and every single trade that I am making in one academy. Cost varies based on your goals, so I'd love you to just check it out. Book a free call, no obligation unless it's a perfect fit for your needs. Fair enough? It's the first link in the description. All right, so people think you need millions of dollars or something to make a lot of money, but I want to debunk that myth. With the first small account strategy that you're going to see, you can have insane results, but I'll discuss what you need to get correct to get the maximum gain, which can be anywhere from 2 to even 50x returns. I just want to say though, this position requires attention. I understand people want easy and fast money, but money isn't easy. It's either very difficult in terms of time and managing, like this first example I will show you when I jump into my screen, or it's expensive because you get a shortcut like going to college, mentorship, or taking a course. But I'll do my very best to walk you from A to Z in this following example. Here's an image of the first trade. It's showing a profit of $1,493, but has no risk. This isn't fully true because Robinhood isn't accounting for the costs of filling this trade, which I will discuss shortly. The cost is really going to be a few $100, but the gain is many times more. The position is created with 4 options consisting of 2 call options and 2 put options. These calls and puts are spread out over 3 different strike prices, all with the same expiration. The goal is to profit from conditions where the price remains fairly stable and the option demonstrates declining implied and historical volatility. Let's jump into my screen and I will open this trade for you to see step by step. All right, now let's take a look at this Tesla Christmas tree. Now that I have opened up my account, I'm up currently $261,000 on Tesla, but I want to show you the small account strategy using Tesla. Now, what we're going to do, we're going to go to Tesla options. So that's the first step. Now, the first step to opening up this position is to sell a call option. Now, I'm going to pick a date somewhere in the future. If you're watching this in the future, it doesn't really matter because this strategy is going to work the same whether you're watching this in 2022, 2023, or beyond. Okay, so I'm going to pick an option that's about 1 month from expiration. Roughly 4 to 6 weeks is fine because when a stock consolidates, it typically moves sideways for about 3 to 8 weeks, somewhere in that range. So 4 to 6 weeks is going to be a good time period for me to bet that Tesla isn't going to have a whole lot of movement. Again, this is Tesla, so it is harder to predict because Tesla is a really volatile stock. But again, you can choose this strategy on a stock that you think is consolidating. You can use technical indicators like RSI, moving average, or one of my favorites is Bollinger Bands. So I'm going to click May 6 right now. And for May 6, I'm going to sell the $1,100 call option. So step number 1, sell a call option. Now, this call option that I'm selling is going to be the peak of my Christmas tree. It's going to be the very peak. And if Tesla stops right around $1,100, that is where I'm going to see the biggest gains on this position. But again, I don't have to have this option expire. What I can actually do is, as my option approaches expiration, say it's the end of April or even the beginning of May. Now, the beginning of May would be really close to this option's expiration, but let's just say a couple weeks has passed and the stock is trading for around $1,100. That's when this option is going to see a lot of gains, even though it's not even that close to expiration. So step number one is you want to sell a call option. And again, this is going to be the peak of your Christmas tree. Now I'm going to buy a call option. Now I'm going to buy a call option at 1080. That's because I think Tesla will stay above 1080 for the next couple of weeks. And now what I can also do is I'm also going to protect this position by buying an 1120. Now you will see how this is going to end up playing out when I go over here and create a custom order. But first of all, pick a sell. We pick the sell. Now we're buying a call option under the strike price, so 1080. And now I'm going to buy a call option over the strike price at 1120. So now I have completed this order. The only thing that I need to do now is I need to go into this custom order section. This is going to be really important because basically you need an equal amount of buys for each sell. So you don't want a 1-to-1 ratio. You want to click custom right here. And because we have one buy and a second buy, but we only have one sell, this is not a balanced trade. And as you can see, it's going to be costing you a lot of money. Well, I can imagine that many people do not want to pay $8,000 to open up a position. So instead, if you end up selling two of these, the actual cost of this position is going to go down to just $52. So this is going to change by the minute. However, as you will notice, about 33 to 50 bucks, and our total profit is $2,000. So this is an extremely powerful strategy because you're only risking a little bit of money for a very, very huge gain. In fact, right now, as it currently sits, it's $13 into $2,000. It's pretty insane. But of course, if you do go fill this, I do want to say one of the issues is because you're dealing with 4 different options right now, this is going to be a little bit more expensive than $13. I would imagine this is going to be about a $50 to $100 spread. And now as I'm talking here, it has actually said that the max loss is 0. But again, I think this is going to be about $50 to $100 if you're going to open up this trade. So it's going to be about a 200x opportunity. So right now it's currently trading for about $100. So again, 200x opportunity is what you can get with this position. Now let's talk about managing this position. This is pretty much the most important thing. So this position currently expires on May 6th. The way you want to play this is basically if Tesla continues to trade within this range, you're going to continue to have profit because you're paying very little money. So even if Tesla is going to be right here around $1,080, you're going to see a decent profit. If Tesla goes beyond $1,100 up to $1,110, you're still going to see a profit. As long as Tesla stays within this range right here, in the next few days, the next few weeks, you're going to see a lot of profit, and this position is going to move to a few $100s worth of profit. Now, you're not going to see a full 200x gain until you get closer into the May expiration. At that point, you can close this option for a potential $1,000 gain or higher if Tesla is still within this range, especially if Tesla is hovering right around $1,100 in this example. However, all you really need to happen is for Tesla to stay within this range. So the most important thing on running this strategy, whether you're doing it on Tesla or any other stock, is to have a stock stay range bound. Now, the way I would close this trade is I would set an expectation for, hey, I'm putting up $100. I want to leave this trade with $1,000. So that's probably what I would do. However, I would probably sell this stock at a $500 gain as well. So if I see that the position is up $500 or $600, then I have 5 to 6x my money. And at that point, I typically like to sell and take a profit because the saying goes, you never go broke taking a profit. Now, for a lot of people, it's really going to depend on how aggressive you are. If your thesis continues to stay that I think this stock is going to trade within a certain range and it continues to stay right around the peak of this strategy, then you can keep holding that position and keep gaining more money. However, if you feel that there's a lot of volatility in the stock, you have a big profit in your hands, and you're scared to lose that profit, I would just say don't get greedy. Take a 5 or 6x return. You have seen how to place the trade, but there's also a lot more factors you need to know to make money from this trade. The trade profits as expiration day approaches if the price lands within a range near the center strike price. The most important thing is is you pick and forecast a target price you believe the stock will land on at some point in the trade. Because I don't hold this position until expiration, it's only important the stock approaches the top of the profit chart at some point in the future, but doesn't have to end there. That's because when I open this trade, my goal is to close the trade when the stock moves toward the strike that I sell. In the example, we sold the 1100 strike. So basically the stock really has to do nothing for a few days and the position will see a nice profit. Even if the stock moves up a bit, then down, that's still fine as the position will see daily profits if the stock stays within a tight range. So this first strategy is really for when you see a stock consolidating and not having much movement. This typically happens after earnings has come in and there isn't much more news expected on the stock. I like using this strategy on blue chip stocks that have predictable charts. One of these stocks, which is super cheap, is AAL or American Airlines. Let me show you a quick example so you can see this very cheap option trading strategy in action. All right, so the next stock that I want to talk about is American Airlines, because this stock, if you look at the chart, it has been a pretty steady stock. So over the past 3 months, it's basically up 0.86%. It has done absolutely nothing for 3 months. If I look at the 1 year, it has gone down about 21%. However, typically within a 3-month time period, this stock really doesn't do too much. So if you take a look, it's been $22 on June 22nd. And now if I go to about November, which is 5 to 6 months, this stock is still at $22. So it didn't do anything for 5 months. Now, again, if we take a look from about late November, it's been about $19 and currently it's sitting about $18. So this stock really doesn't have a whole lot of movement. It seems that investors are trading American Airlines in a very tight, narrow range. So at any given 1 month or 2 month period, this stock doesn't really do too much, which is a fantastic candidate for the same strategy that I was just showing you. However, there are a few key differences with American Airlines. Now, the main key difference is that American Airlines is an $18 stock and not a $1,000 stock. That is actually an advantage in some regards and also a disadvantage in other regards. Let me go over an example. So again, I'm going to go for an option that's going to expire on May 6th because it's about 5 weeks away. And I just mentioned a stock like American Airlines isn't having that much movement in a single month. So the first thing that I'm going to do again is I'm going to sell a call option. I like to go for at the money call options. So right now I'm going to sell the $18 strike price. It is just slightly in the money with American Airlines trading at $18.08. Now, what I'm going to do is I'm going to buy the $17 call option. And now I'm also going to buy the $19 call option. So now you'll notice again that I have a total cost that is pretty significant. It's $145, which is kind of a lot for a very cheap stock. So what I'm doing now is I'm going to go to contract ratios. So whether you're doing this on Robinhood or a different brokerage, I do recommend Robinhood. They do give you some free stocks. I'm going to put that in the description, but it doesn't matter which brokerage that you use. It really doesn't, as long as you're following what I'm doing step by step in your brokerage. So click custom order or make a custom order where you're selling the equal amount of shares that you are buying or the equal amount of contracts. So I'm going to sell 2 $18 contracts. Now the total cost is only $14. If I scroll down right here, we can turn about $15 into $100, which is basically an $85 profit. This is over a 6x return. This 6x return can happen by May 6th or by about 1 month from when you're watching this video and you open up a trade just like this. However, again, I want to caution you that you're usually not going to see the full 6x because there's a few factors at play. One of the factors is there's bid and ask spread costs that you have to account for. And the second thing is that typically this stock is not going to end right at the very top, right at $18 in this example. You're typically going to have the stock end somewhere between this range, but also you're typically, or you actually should close the position before expiration, because as expiration approaches, this option position becomes very volatile. However, as long as the stock stays within this range and a few days pass, a couple of weeks pass, this maximum loss of $15 will start to go up because these options will start having a very high probability that they will end somewhere in the zone. And because they're going to end somewhere in the zone, you are going to start seeing a profit. So you might turn $15 into $30 or $45. So you may get a 2 or 3x gain. And at that point, I would look into selling this position for a profit and getting rid of it early, because with this type of strategy, you really want to manage it. You want to keep your eyes on the profits. And if you see a 2 to 5x profit, you really want to get out of the trade before it can go south mouth on you. All right, so now we're going to go back to Tesla. I want to show you a slight variation of the strategy and how you can actually bet on the stock doing something very specific. And if you get that right, you can again see a 5 to 200x on your money. So right here, as you see, as I'm even making this video, Tesla is moving closer to $1,100 per share. So if I actually opened up that first position that I was showing you guys, I would already have a gain on my hands of about 10% because the stock is moving up towards the price that I believe it's going to be around. But what I want to show you specifically is, say as an investor, you actually believe that Tesla is going to go up to $1,200 per share, or you have a very specific view on a certain stock. Well, what you can do is you don't have to sell a call option right at the money. You can actually sell a call option for the exact price that you think the stock will end at. So let's say that we believe that Tesla is going to end at $1,200 per share. That is going to happen by May 6th. Or actually, let's say that it's going to happen next earnings, and let's say next earnings are sometime in June. So let's say that June 17th will capture earnings. So now what we're going to do is we're going to pick June 17th. Now we're going to again go to sell call option and say that you think the stock is going to end at $1,200. What you're going to do now is you're actually going to sell the $1,200 call option because that is going to be the top of your profit chart. So selling the 1,200, I'm going to go a little faster. I'm going to buy the 1150, and now I'm going to sell two strike prices above as well, the 1250. And again, one important thing is I need to go right here into the contract ratio, click custom, and I'm going to sell two call options to match each of the call options that I'm buying. This strategy now costs $295. However, it can bring in a total of $5,000 worth of profit, or about $4,700 after you account for the money that you're paying. So now the top of this strategy is actually going to end when Tesla is $1,200 per share. So if your target price is $1,200, you don't have to bet at the current level. You can actually set up the strategy for anywhere that you wish. And the way that you control this is by picking the strike price and selling the strike price that you believe the stock will end at on expiration or sometime in the near future. So basically right here, I sold it 1,200. Again, over the next few weeks, if Tesla goes up towards this price and it goes up right here, that's actually going to be a very big profit. It currently says $1,000, but if this happens in a short amount of time, then this position can be up actually $2,000 or $3,000, and you don't even have to get into June 17th or wait for the option to expire. You can always close this option for a profit as long as the stock is moving in the direction of the peak of your strategy strike price. Remember, these are riskier trades you need to close before expiration when you see some profits. Don't get greedy on these trades because profit is profit. If you need help or want mentorship, the first link in the description is a way to work with me.